Hey, it's Tim from EminiMind. Wanted to do a quick trade recap video. Just got the plus 20 hit on the 15 minute. I'm going to go for a bike ride now, so wanted to get the video out. Last week, was gone for a couple days for a funeral, so I wasn't trading. And then yesterday, I took the 15 minute and then I had to go for a bike ride early, so I didn't really trade the full morning session. But wanted to touch on today's trades, and then if you want to review Tuesday's trades, those are all in the recording of the live trading session in the dashboard. So today, the 15 minute, we had a gap up and a gap up and go. And one of the things that you'll notice when we get into these earnings season periods is that you have a lot more gaps. So, we kind of were in this period of consolidation for the last couple of weeks. And you can see that there were not really a ton of unfilled gaps. We just filled the one from these two needed to go away. And we just have the unfilled one from 41.59, which was end of last week. And so when you have a lot of overlap in the daily candles, that shows that the prices that we were closing at, when those prices are constantly filling in the next day or 2 days, it shows that there's a lot more agreement on what the closing price is and where value should be. And so those are the times where you see a lot more consolidation and kind of a tighter, like in this case, channel. Sometimes it's a sideways move. In the case of the last 2 weeks, it was kind of a upward channel where the lows are getting higher and the highs are getting higher, but we're in a very tight range. And so with the, actually I need to put yesterday's in there, with the earnings coming out and all of those earnings being mostly after the bell, then you have a lot more jumpiness at the open. So you have a lot more gaps and things, and that makes for bigger trend days, bigger ranges overall on the day. In the last couple of days, we've seen that starting out this week. So going back to intraday here on the ES, that 15-minute chart, we broke above the candle's high, so it was a long this morning. And like I said, we just got the plus 20 points. That was this dashed line up here, so you can see where that's at. And then other than that, we had a couple. Well, there were a couple of 1-minute trades today. Nothing huge. Let me get rid of this retracement here. This gray line is the top of the 30-minute range, and if we zoom in, we can see. There was an inverted hammer up here. Nothing really that coincided with a high tick a day here, and same with this guy up here at 55. There wasn't a high tick a day. This guy here, this inverted hammer, I liked because it was a double top. So you can see here we made the first high. This was the 30-minute high. And then the second one came up and double topped. Again, it didn't really have a official high ticket highs, but shorting below that inverted hammer, it got a little bit of a move down, not a huge move, before we turned and went higher. So a couple of those there. We did have another top over here, a double top, but there wasn't really an inverted hammer, a solid opportunity to short. And if you look at the overall trend for the earlier part of the morning, you can see the uptrend looking like that. So overall, with the 15-minute breaking to the upside, that gives a little bullish sentiment from the start. And then the full halfway back on the day just pulled back right to its 50% here. And on the 5-minute, it did get in a regular hammer. I have been talking with 2 traders who've been kind of partnering up and kind of trading buddies, I guess, if you will. And they've been doing a lot of 5-minute hammers and inverted hammers. That's totally fine, versus doing the 1-minute chart. Just know that your stops, like the ranges of those candles, are going to be a little bigger. The ranges of the profits are bigger because you have less noise in that 5-minute candle. So I think the most important thing is if you're going to execute the trade on the 5-minute, then manage it on the 5-minute. If you start kind of going back and forth and entering on a 1-minute and then trailing your stop on the 5-minute, that can start to get a little bit confusing and challenging. So if you just pick a time frame and enter and manage the trade on that time frame, then you'll be golden. It's okay to use a little bit of top-down analysis, like looking at a 15-minute chart for the larger trend, and then going to the smaller 512 tick chart, let's say, to draw up a retracement and take it on the 512 tick chart. But by and large, if I'm entering on the 512, let's say, I'm going to manage the trade on the 512 and trail my stop on the 512. And so just a little subtlety, but it's something that can really throw you off, because if you're constantly bouncing back and forth between different time frames and then sort of frantically wondering what to do versus having a plan in place, this is how I'm going to manage my trade every single time. I may not get the max profit out of this individual trade, but I'm going to get the meat of the move, and over 50 trades or 100 trades, I'm going to get the max profit over that basket of trades. So that would be the takeaway there. I'm going to keep it short today. Got a bike race this weekend, so getting ready for that. And then next Monday, I'll try and do a longer market analysis. On Tuesday, I'm actually doing a psychology trading webinar. I'm guest presenting. I'll put the link for that in the description below if you want to sign up for that, and it's free. And I'll post that on Twitter as well. So hope everyone has a great weekend, and I'll talk to you soon.